This is the off-exchange volume for GameStop. Take a look at how high this rip was, and it just happened. GameStop short exempts also have been followed from the 261,000 short exempt day to 186, 261 again, and then 138,000. Now, the reason you're probably seeing that massive jump in off-exchange volume is because short sellers who are short the play are under serious pressure. Not only from shorting the stock, but we're going to talk a little bit about it later on in the video. But GameStop concluded with a 10% closing, experiencing a 22% uptick in stock value over the past month. Short sellers are enduring substantial losses in the billions, and the top 10 hedge funds involved in shorting the stock are Susquehanna International, Sandler Capital Management, WS Management LLP, Simplex Trading LLC, Chicago Trading Group, Jane Street Group, Amello Capital LLC, Citadel Advisors, National Bank of Canada, and Group 1 Trading LP. What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. As you see by the start of today's video, that was just a little sprinkle as to what we're going to talk about today. And we got a lot of stuff that you're not going to want to miss. So make sure to tune all the way until the end of the video. Have post notifications on if you are new to the channel. Hit that like button and comment Black Swan in the comments down below. Now, I want to bring up one thing before we get into AMC's chart. Well, two things before we get into AMC and GameStop's chart, besides the fact of the off-exchange volume that we just covered on GameStop, the short exempts that we just covered on GameStop. Hedge fund crowding in US stocks just hit a record high, and this is something that we just posted about that Ken Griffin himself is worried about. The typical hedge fund currently holds 70% of its positions in the top 10 stocks. This comes as the S&P 7. The 7 largest tech stocks are up more than 20 times as much as the S&P 493 in 2023. But what is the alternative? If you're a hedge fund manager and don't invest in the largest names, then you miss out on easy money. In a market environment where tech stocks and AI are carrying the entire market, hedge funds are piling in. What happens when the 10 largest stocks enter a bear market? This is exactly correct, right? Why is the S&P 7, we have been talking about it, why is the S&P 7 up a substantial greater amount than the 493? Not only because tech stocks are leading the sector, right? AI is popping, has been popping recently, but hedge funds are crowding into the same exact trades, and one domino going down will bring them all down. And this is something Ken Griffin has been worried about, and it's not slowing down. Hedge fund crowding in US stocks hit a record high. Now, I can't believe this is happening. Izzo just filed an appeal, opening brief with Delaware Supreme Court. We thought this was all over, but just as you know it, we're back. If she wins, how would they reverse a reverse stock split and conversion months down the road after the damage has been done? This is $1 million question. So now we have the uncertainty. Are they going to undo a reverse split? Are they going to undo a conversion? Blows my mind. AMC's chart, I am going to assume today, right? Let's just assume AMC and GameStop's chart are extremely bullish because the SPY is extremely bullish. Crypto is extremely bullish. So we are not going to, in today's video, bring the bear effect into account, right? We're going to say everything's bullish. It is to the T with what we've been tracking. This is what we'd be looking at. AMC scaling up right here and getting this slight retracement before getting that nasty rip like we saw back in January, which was a 1,000% gain. Today, we'd be starting that retracement, building another day, which would be tomorrow, Wednesday, building that support on $7, and then getting that nasty move higher. Does it have to be only 2 days of consolidation? No, it could be longer, but very bullish case scenario. On Thursday, Friday, right towards the end of the week, AMC to see massive pops, at least smashing through $8, watching the gap fill around $10, right? The bullish case scenario that we are watching. Same goes for GameStop, okay? GameStop just hit a double top at $17, a bearish indicator that shows a break to the downside, right? It's forming that McDonald's sign here. But let's just assume we are bullish. Where we would be correlated to AMC would be this gap up back here, came up, double topped, scaled slightly lower before creating that new high about 5 days later. GameStop, let's see, double top, scaled a bit lower. If we hold support at $15.30, looks like we are coming up into the channel around $18.60 early next week, right? That's what we would be looking at. The bullish case scenario for both tickers, and both tickers would be leading them into a major squeeze. Could GameStop be closer? Sure. But the only time we saw the very similar setup was right here. Gap up, double top, climb, and then it had that long run up into the squeeze. Could play similar. Could play exact. Now let's finish covering the numbers. 0 shares available to borrow for GameStop. Call to put ratio, we are winning on the options chain, 10,000 calls compared to 3,000 puts expiring in the money and 63,000 calls expiring out of the money. Don't hand your money to market makers. You better hope we get a scale up towards the end of the week. And again, we covered short exempts very high. AMC, 4.7 million shares available to borrow, apparently against it, right? Options chain, we are winning 16,000 calls compared to 4,000 puts expiring in the money and 153,000 calls expiring out of the money. A lot of calls being bet this week and next week on AMC's options chain. And these short exempts are absolutely insane. 354,000. This shows that the algos are really trying to kick things off with AMC. There are a lot of old buy orders that the algorithm is trying to push through, and this is how they're matching them. 354,000. Okay? They are just cock blocking AMC's Hulk dick. No, but seriously, they are just blocking the run as best as possible. But it won't last long, and that is because of margin calls. Margin calls from clearinghouses risk stoking crises. Margin calls from clearinghouses stoking crisis warns the Bank for International Settlements today in agreement with our posts over the weekend. It is also warned that liquidity needs may force life insurance companies to recognize currently unrecognized losses in similar fashion to the US banking turmoil in March. Now, I'm not going to cover this entire thing, but margin calls may be over the horizon, especially with that December 15th date, with that 999 trillion, as well as what's happening with banks. Bank CEOs expected to protest before Congress, according to Reuters. The top bosses of JP Morgan, Bank of America, Citigroup, Wells Fargo, and others are expected to warn lawmakers that capital hikes and other new regulations will hurt the economy and should be indefinitely shelved. Of course, these major banks are worried about capital hikes and other regulations because why would they want regulations when regulation just makes it harder for them to do criminal things to make more money, especially in a time of need? On top of that, Wells Fargo just suspended new HELOC loans, and the Bank Term Funding Program BTFP reported $113.859 billion in loans outstanding to banks just last week. What is this funding program? Established in the wake of Signature Bank and Silicon Valley Bank failures, which saw some $319 billion in assets and $264 billion in deposits blow up, this program was created as an emergency lending program created by the Federal Reserve in March 2023 to provide emergency liquidity to U.S. depository institutions. Now, we're not going to cover how this works, but instead, let's basically break it down for you. In the aftermath of those two bank failures, which accounted for $320 billion in assets and $264 in deposits, the Federal Reserve, or the Fed, turned on the money printer and created the Bank Term Funding Program, okay? Bear with me here. Each week, the Fed provides billion in short-term loans through its discount window. But banks required longer-term borrowing power, so the Fed created this new program, another emergency lending program. So not one for short-term, but another for long-term. And because banks are so resilient and sound again, quoting Janet Yellen, the Treasury Secretary had to approve an additional backstop of $25 billion from the Exchange Stabilization Fund just in case for another emergency lending facility. So we're not done. As Treasury Secretary, Yellen has complete authority over how the ESF is used as it was mandated by Congress. Despite that mandate to, in quotes, support American businesses and households, it appears that the real beneficiaries of BTFP, which is the program, are the banks. Last week alone, this emergency lending program that is backstopped by another emergency facility loaned banks over $110 billion in long-term loans. But again, probably nothing. Now, before we move on and get into the S&P 500, the Tesla trade, crypto, and some additional stuff to close out the video, guys, get in the Discord. The link is right under the video. I'm not going to ask you again. I'm pissed. No, but for real, guys, you should get in the Discord. And if you're thinking about it, debating about it, it's one coffee a month. And if you don't drink coffee, it's one tea a month. And if you don't drink tea, it's one case of Poland spring water a month. And if you drink water. So get in the Discord. The link is in the top of the description or pinned in the top comments. And also, if you want up to 15 free stocks, each valued up to $2,000 per stock, level 2 order book data so you can see where big players are loading up and dropping off shares, access to trading options, going long, going short, viewing other exchanges, all for free. Use my link, sign up for Moomoo, and make a deposit if you'd like. Whatever cash that does sit in your account earns 5.1% APY. Once you deposit, you're getting free stocks and earning 5% on your money. Now, another sign of weakening consumer demand, declining manufacturing data. U.S. factory orders fell 3.6% last month, making the biggest monthly drop since April of 2020. September was also revised lower from 2.8% to 2.3%. Over the last year, factory orders are now down 2.1%, the biggest drop since September of 2020. Core factory orders also dropped 2.2% year over year for the 8th month in a row of annual declines. This is a trend worth watching and will essentially affect the market, as well as US JOLTS data coming out. November JOLTS data job openings fall to 8.73 million, estimated at 9.3 and previously 9.35, which is the lowest since March of 2021 as well. Now the SPY is down 0.29% on the day, trading at 455.40, holding this level in this box above 455. I am currently in calls and puts because December is usually a whipsaw month. We usually see a flash down, a flash higher, a flash down, and then a climb. January, February. That is the usual cycle that we see, and it's a very, very dangerous game to trade. As of right now, watch for a hold on the macro trend line at 454.40. If we break below that, SPY could get a little bit bearish, but as of right now, it is just consolidating once again for a potential move higher. I came all the way up to 460 almost, and then volume started decreasing. So just be aware, if we get another volume decrease on a hammer candle, watch for a move one way or the other, and then volume to pick up. Also, make sure to keep an eye on the VIX. Ex-Tesla employee casts doubt on car safety. Tesla China-made EV sales fall 17%. Tesla strike spreads to Denmark, halting shipments to Sweden. All this negative news, and Tesla's still up 4% on the day. Tesla trading at 245.32, up 4.13% on the day, smashing back out of this channel. Tesla is just holding strong. We have been waiting and waiting for that retracement, and even with some negative news, Tesla just doesn't want to hit it. Although we aren't in the time frame just yet, I would like to see no retracement for the whole month of December. And in that case, I don't think we would need one. However, as of right now, where we stand, I do still see Tesla potentially getting a retracement, and just be aware of that. Be very, very careful. Either way, I still am in my calls on Tesla. Bitcoin, 42,697. Beautiful, staying at 42, not hitting a wall. Exactly like the old cycle. If I bring this here, this is what the old cycle looks like. Bitcoin to consolidate at 42, come back, retest 40K, and then climb even higher. Overall, doing extremely well. A couple things to note. I did sell Mara and Riot today. Coming up into the halving, I see slight weakness in Riot and Mara's chart, the mining companies. However, I could be very wrong, and either way, I made 90% on Mara and 50% on Riot, so I'm not even upset about it. Now, keep in mind for Bitcoin as well, Wall Street listed the first ever spot gold ETF in November of 2004, and the price never came back down, as you can see right here. We may never see this Bitcoin price ever again once the BlackRock ETF and others are approved, potentially in early January. So if you guys are missing a spot in Bitcoin, just be aware of that. Finally, to close out the video, Moody's changes China's outlook to negative from stable. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to join the Discord. Come talk with me. Come talk with the most amazing people. Get your free stocks by signing up for and making a deposit. I love you all. Lottery stocks out. So guys, one more thing to note. I posted a sponsored stock video earlier. The stock is actually doing well, and it's a very, very cheap stock. So make sure to go watch that. Peace.